Good afternoon, everybody. Welcome to the Friday weekly recap here from the T3 Live Worldwide headquarters. I'm Laz, filling in for Scott, who is out today. What can we say that we haven't said already? I think it's best to go back and talk about some of the points we made this morning on the morning call, and truthfully, some of the points we've made over the last couple of weeks, if not the last month or so. It is a day trader short-term tape. That is really what we have to work with. There have been a lot of violent turning points in this market. Last Thursday marked a violent sell-off. Today we're seeing a very large gap up. So you're getting a lot of this push-pull type force without really a trend. There really is not a trend that you can hang your hat on at this time. Like I said this morning, perma bulls are not getting paid. Perma bears are not getting paid. Tactical short-term traders are the ones, that are nimbly able to carve out some trading opportunities in this market. And that I foresee happening until, unfortunately, not to be vague, until it stops happening. When, that's anybody's guess. I wouldn't be able to tell you. We just need more time. And this is the way markets trade. It's really a series of, market trends followed by sideways channel, range-bound markets, back into market trends. How long the, consolidation or the channels last is anybody's guess. Can be weeks, can be months, can be, a long time. So let's just kind of respect the market and the language of what it's telling us right now and look for those smaller time frames, smaller trades, whether it's a day trade or a 1 to 3 day trade, short-term trade. That's, I think, the path of least resistance. And that's the area I've been focusing on. Me personally, I've been day trading. I find it to be a very low stress, consistent approach to what the market gives. I don't need to have, some sort of macro thesis, long or short. I can just trade what the market gives me every single day without having to worry about getting caught in, a headline-driven gap up or gap down. And I think there's a simple beauty in that, that I think traders that are struggling need to sit back and maybe begin to embrace. Let's take a look here at the chart, the S&Ps. We'll look at the spiders. Flat 21 EMA, a little bit of rehashing what I said this morning. Gapping up back into the resistance we saw in the market from late last week, the Tuesday, Wednesday highs around 136 and a quarter before we saw that Thursday, pretty nasty sell-off, and now we're right back there. So, lots of ebbs and flows, and like I said, not much of a trend. For the better part of the month of June, since roughly the beginning of June, we've chopped around in this range. So we'll look for some range resolution possibly next week, or we'll look to, maybe sell at the upper end of the range for a trade back down. We now have this gap or this large hole you can see created by yesterday's close and today's open, and we might fill that, on the downside before then turning back up or turning and breaking lower. So, anything goes here, and there's lots of possibilities on the table. In traders, as traders, we deal in we deal in the world of probabilities. That's really, we don't deal in the world of exacts. And when you look at a chart like this that is without a trend, you have to look for areas where you can define your risk and look for small pockets of risk with higher pockets of reward. It's not about being right. Bulls can make money in this tape. Bears can make money in this tape. It's a trader's market, and it's about mitigating risk. So with this type of market condition, respect what it's telling you and trade it accordingly. Let's take a look at the smaller time frame. Here's a 34-minute chart, or just a way to look at sort of this over a smaller time frame. Yesterday, hanging in the balance, really just flirting with breaking support, and then today, up 50 handles or so off of yesterday's lows. And we started out strong this morning, and the market just continued to grind higher throughout the course of the day. We've seen this trade before. Generally, when a market gaps up really big, whether it's up or down, and the gap is fairly large or excessive, those are the type of trades that can result in trend days. And after about the first hour, hour and a half, the market started to just begin to, like I said, slowly grind higher. And we're up, intraday, we had a nice move up. It's now about a little after 3 o'clock. The recap is, again, I'm doing the recap a little early. So I suspect that, there could be one little pull in here into the close, but bottom line is it was a strong day. I suspect that we're going to close the day strong. We'll see what Monday comes. Again, there's headline-driven risk that seems to, be apparent, especially on the weekends. So we'll see what the market gives us come Monday morning. But right now, like I said, the VTF, the intraday trades, that's really where opportunity is. I hate to sound like a broken record, but that's really what's happening. Let's take a look at some other symbols. Apple gapping up this morning, just like the market, slowly grinding higher for the better part of the day. Let's take a look here. So we got the gap up. We got one pullback in the first, 10, 15 minutes or so. Then the market began to just sort of lag and slowly creep higher, for which it's done for the better part of the day. Apple seeing a nice retracement here. The daily chart, has anything really changed here? Not really. We're still in this range. We still have these upper boundary. You still have this lower boundary. We're still sort of in the middle here. Could this leg higher? It could. Could it leg lower? It could. This is the difficult process with, sideways range-bound markets. You want to generally look to do things at extremes, up here or down here. That's where money is being made. Getting involved with stocks somewhere in the middle of a range is definitely a harder trade to be involved with, as the risk is not as calculated. So we'll keep an eye on Apple, because Apple, always speaks of leadership in market direction next week. And obviously traders are going to be trying to look for a breakout of the upper range and vice versa on the downside should that present itself. Chipotle, another stock that, saw a big, massive haircut earlier in the week. Not really getting much of a bounce, but, we talked about the 200 EMA this morning. Off the lows around 370, trading around 379 this afternoon. So a little bit of a bounce starting to develop. I would wait to see what the stock does over the next couple of sessions. We could retrace, back up into these averages, into the 395 or even 400 level, next week. So keep an eye on that. We'll keep an eye on that one for a trade to develop. Some of the banks we discussed, JP Morgan, gapping up with the market today into the upper end of this, channel or range that it's been in, and selling back down. So as obviously showing some relative weakness there as the market has traded higher all day. Let's go back to JP. This stock has done nothing but sell lower throughout the better part of the day. So some relative weakness there at an upper band of resistance. Some of the ags got some attention today on the VTF. We talked about potash. Into prior resistance up here in the $40, $45 area, selling off today. Not to be surprised, had a big run, little mean reversion. Your 21 EMA is all the way down here, so is your 8. So, looking for possibly some more selling. We talked about this intraday up here against. If you go back to my midday update, I said this one presents an interesting trade for this afternoon to possibly trade lower on this bounce. Some of the other ag names, CF, not seeing some of the selling, but at interesting areas on the daily. Some of these stocks have had major runs and probably could use a rest over the next couple of sessions. So for those of you looking for some opportunity trades, like I said, trading extremes, buying, in extreme weakness or selling in extreme strength, that mean reversion trade has worked very, very well for those that know how to calculate those types of trades, really more for the shorter term traders. So, to put it all together, and lastly, Nike, forgot about Nike. 85 area, some buyers stepped in, not much in terms of convincing price action. We're basically, with a little bit more time left in the day, right where we open. You can see the open and the close right here, basically the same point. So not much to go, not a real excitable trade. We did catch one move off the lows. Here you got a little bit of a bounce around $85 intraday, but starting to, sell off here into the last hour of the day. Like I said, not really much in terms of general direction. This is where we opened, this morning, and this is where we'll probably close, somewhere in or around. So retailers, taking it on the chin off that. UA was another trade this morning that some people are looking at, buying at support, snapping back here in Under Armour. Lulu, another stock that's been beaten down. Not much in terms of a bounce. Got a little bit of a bounce yesterday. You can see this tail up. A little follow through today, but nothing really to write home about. And, this probably needs more time to set back up, but nothing really changed here. Still acting and still acting like a very weak stock that potentially wants to probe more, more downside here. So keep an eye on some of those names into next week. Again, it's a very, very calculated tape right now for those that have, precise points of support, resistance, going after stocks that are either beaten down, looking for mean reversion, or have rallied a bunch, looking for mean reversion. The market is trying to figure out what it wants to do. Until the market really gives us that break and that volume, that engine that drives us higher. To me, again, stay light, stay nimble, stay flexible. There's money for longs intraday. There's money for shorts intraday. And you can, again, as the weeks evolve and as the days unfold, just remember that a trend is not built in one day. One day does not define a market. Neither does 2 days or 3 days, to be quite honest. The market needs to put in a lot of work to really tell us what it wants to do. At some point, there will be a path of least resistance. There will be a trending market, whether the trend is up or whether the trend is down. There will be a trend there. And we'll be able to, again, take positions for longer periods of time. When you are working in a trend-less environment, or an environment that is a lot more violent but doesn't really have any general underlying direction, day trading is a very, very profitable strategy. So understand the market conditions. It'll help navigate this market and help keep you in a position of strength so that when the trend does resume, if a trend does resume, you're able to operate without having to make back tons of money of losses, stemming from a non-directional tape. Talking a little too much. With that, have a great weekend, and I'll be back to talk to you Monday morning. Have a great weekend, everyone.